Reading the headline overnight, China lets its currency go past 7. What do you think as a U.S. equity strategist to do next?
Well, first, Mike said probably the most important thing. This is a spasm. I mean, you went from a couple of days ago with a VIX of 12. Where is it now? 21 the last time I looked at the tape. You made the point about the 10-year, and I'm looking at the 10-year more than anything else. When the 10-year is well below 2, it's really signaling something bigger than this. And if you saw these moves, these were beginning even before this. You know, if it was just a trade discussion between Trump and China, but it's not. The cyclical data on a global basis is weak. You talk about the ISM number, which isn't as bad as it could be. But if you look in Europe and in China, is this a bigger problem? And this one, I don't really know. Does this embolden the president to push harder in China because this is a signal that they're feeling a lot of pain? Or is this their counterpunch? It's really hard to know.
So you sound a little less positive than is typical for you.
I have been. As a matter of fact, recently, so when the market ran through my year-end target, which was sounded really bullish at the beginning of the year.
Remember, yeah.
I basically, people said, you're going to be moving it up. And I said, I'm not moving it up. The cyclical data is weak. The earnings data is weak. And that was before we had all of this discussion around trade. So for right now, I think the market's probably sideways, not only until we get through this trade stuff, but until we see the actual economics show a little more resiliency.
Mark, what does this all do to the economic picture?
Well, I think that the big risk is for large companies, and that they're likely to further put off major capital expenditures, and that's been one part of the economy that has been weak. They may put off some hiring decisions. I mean, we really haven't seen that yet. We've lost a little bit of momentum in job growth, but it's still pretty solid. But that would be one place to look. And you look at the ISM index, and that kind of goes to the previous conversation where some of this loss of momentum was already in place. And that was a softer number. The headline number was softer. We've seen the new orders come off in recent months. And so we do seem to be losing momentum. This would further that. And that's really the question, is how much more does this further that? We have our own survey of small businesses, and most small businesses say that this trade war is not really impacting their business, even though they're paying very close attention to it. 2/3 of them say it hasn't impacted their business at all.
Does that change, though, with the new round of tariffs, Mike, impacting consumer goods that come? Oh, go ahead, Mark.
It might if we see higher prices this year, but we're not likely to see them this year because most of those goods are either here or already in transit. So the higher prices would be well into 2020. I think a more immediate question is, how does this market turmoil impact small business? And small business is much more closely tied in to the impacts of the financial markets. And so the turmoil will likely bring confidence down.
Jonathan, I mean, the consumer continues to be strong, one would argue, for the most part.
It is. And
earnings were coming out of an earnings season now that was fairly good, at least versus the expectations, which had been lowered, albeit. The question is, I mean, all right, if you're a decision maker at a company in terms of using capital right now, you may be holding back.
Yeah, I don't think that, I don't think a small business guy is looking at today's headline and thinking you should do something differently. But if you looked at the jobs data, the weak point is the small business hiring has actually shown signs of weakness, and perhaps they're taking a little bit more of a hit there. And yes, the consumer is in good shape, but it almost feels like 2015-16, where the cyclical part of the economy, the industrial part of the economy, I don't know if it's in a recession, but it's showing some signs of real weakness. And the consumer is in pretty good shape. I mean, job hiring is good, wages are up, people are spending. If you look at the GDP report, it's not the industrial part of the economy that's holding up, it's the consumer.
So how does that resolve itself usually?
Well, listen, ultimately, I think that this thing rights itself a little bit, but it's hard when you have so much weakness in Europe and abroad to have that cyclical part of the economy doing well, and it's sluggish. And until it turns, I think the stock market's not going to like it.
10% tariffs coming on U.S. consumer goods.
Okay, so,
and you have a stock market that's now down 6 days in a row.
If every time, Sarah, that we listen to the president threaten tariffs, we made the assumption that they were really going to happen.
You don't think he's going to go through with it?
I mean, I would think the odds are that this is more tactics than not. And if you look at his track record over the last few years, yes, he moves us forward, but it's a stop and a start. He's clearly gotten a response here.
What I've learned is that he seems to like tariffs, thinks the Chinese pay them, and thinks that they give us an upper hand.
Well, I think the real story here is if we believe that we're waiting for the next G20 meeting or some deadline for this trade stuff to be over, this is a Cold War. This is going to go on for years. That's the most important story. It's going to, but against that backdrop, he doesn't plow forward with everything he says. He waits to elicit a response, freaks people out, and then all of a sudden he goes and he extends or he renegotiates.
Well, but that goes to the larger point of how are you supposed to make a decision as CEO of a multinational company in terms of how you want to allocate capital when you really don't know what the playing field's going to look like.
Don't. Long-term commit. It's very difficult to make long-term commitments.
Right.
Listen, you can invest in inventory or something,
of course.
but if you're making a 10-year commitment in a global business, very hard.